taxpayers don't really understand the difference between tax preparation and tax planning. In this session, we are going to talk about key differences between tax preparation and tax planning. So, first off, what is tax preparation? Okay, we all have an idea, okay? And as I learned to become a tax professional, I learned in a tax preparation setting. Okay, learn from some of the best. Can't deny it. H&R Block taught me, 30 years ago, how to be a tax professional in the arena of tax preparation, which is the main way that uh, tax your tax life has been communicated to you probably throughout your life. Okay, um, it's compulsory. You have to pay your taxes by April 15th, give or take a day or two, depending on the situation. But okay, and you go to somebody and you sit down and you bring them your documents, you bring them your W-2s, you bring them your 1099s, you compute all your deductions. Maybe if you're a business owner, you show them your expenses. Hopefully you have a profit and loss statement for whoever prepares your taxes. And even now, as uh, things have gotten more automated and more self-taught, there are plenty of us out there that are doing our own taxes. But the idea is that we learned a certain way. We were brought up in a certain way. It was promoted and marketed to us in a certain way that you should live your tax life in a tax preparation setting. Okay. Tax preparation is reactive. It's a reactive way of living your tax life. It's after the fact, and frankly, I believe it's outdated. Okay, let's talk about how that came about. How do people? Why do people live their tax life in the framework of tax preparation? Okay, and what happened was it was after well, it began in like maybe 1913, and that was when taxation of personal income was first brought um, to the American public and made mandated. And then over time, as tax laws became more complicated and people started deciding that, hey, maybe I am better off having somebody else help me prepare this or do it full fledged by themselves. And by the 1950s, you had companies like H&R Block that were leading the industry in tax preparation as a discipline became a career path for individuals and became a marketable service in the United States that created millions and even billions of dollars over the years for tax preparation firms, and mostly in the retail sector. Okay, and again, by the 50s, tax preparation in and of itself was an industry. And again, that was one way that it was ingrained in us that this is how you lead your tax life. You go through the year, you live your life, you scramble toward the end of the year because you know the new year's coming up and tax season's coming up, and then you gather haphazardly all your documents that you can gather, and, and then you take them to a person and say, here, this is my year that just passed. I want you to make this really good for me. And it just was at the time. I believe it was probably the best way to do things, and that's how it became an industry. But over time, the way that we prepare taxes and live our tax life, I truly believe that it's outdated. Okay, so the big problem is you look at your tax life year to year, and it's after the fact. After the year is over, you can't change anything. You can't um, go back and change things that happen in your tax life in order to have a better outcome after you sit down with your tax professional. Okay, your year is locked, and the IRS basically has you because every document that is there is dated in that particular year. So you can't go back and change how you spent the money. You can't go back and change how you earn the money. You can't go back and change in how you documented your tax life, and you can't go back and save money either after the year's up. Okay, your tax preparer, and I speak from personal experience. Your tax preparer can't perform miracles um, legally. Okay, or and but the pressure that is put upon a taxpayer and actually how tax preparers are graded or on how the outcome of your tax preparation for year on year to year, how the outcome is favorable or not. And then that's a lot of times how tax professionals and tax preparers in particular are rated and referred to other people. So let me give you some real example of tax preparation in real times. Okay, so I had some business clients. They came to me by way of referral, and they were in a business and they made about $400,000 in gross income. Great business, but they had zero tax planning. Okay, and they came to us that first year and asked us, hey, um, surprisingly, this happens a lot, but their their tax professional had passed away. They asked some friends, "Hey, who could you refer?" And they referred myself in our office, and we sat down with them and we looked at their business, and their tax records were decent, and we did the best we could with what they had, and we prepared their taxes. But when it was all said and done, we had to let them know that they had a $60,000 tax bill. And when we broke the news to them, I mean, I could just see them melting. And the next question was there anything that we can do? And I had to tell them, man, the year has passed. At this point in time, there's nothing we could do. We just need to file on time and help to avoid any penalties and things like that. And then maybe if you can't pay the tax bill, help them set up installment agreement. But the whole idea was, and I also explained to them that um, because we're operating in a tax preparation setting, and there was no strategy involved to get us to this point, there's really nothing else that we could do at that point. Okay, so that was just an example of how tax preparation, and it's much more intricate than that. And I will probably have another session that really kind of breaks down tax preparation and all the components of it, and show you how. Yeah, I mean it's the way that most people live their tax life, but it's again it's outdated. It's not intentional. It's reactive. Okay, so now that we have an idea of tax preparation, how it came about, why we operate that way, let's talk about tax planning. Let's say the alternative, right? And initially, I'd like to say that most taxpayers, they don't even know tax planning exists. The average taxpayer doesn't know that there is let's call it a discipline called tax planning. And to be honest with you, I was taught, I was um, brought to slaughter like the sheep. That tax life is basically live your year, go get your taxes done. In my case, Live your year, do your taxes, Jeffrey, and then do it by April 15th on time, and then here comes the next year. There wasn't, in my case, just like in most taxpayers' case, there wasn't a whole lot of forethought involved. And personally, I did not know about the discipline of tax planning until maybe about 5 years ago, and I started doing some reading. And it was initially um, Robert Kiyosaki and his um, tax preparer, I guess you want to call him, or tax planner, Tom Wheelwright, that really opened my eyes to tax planning. And the first thing I recognized that, you know, opened my eyes to tax planning was that, hey, this is for rich people, right? And these strategies and the tactics, yeah, this is Robert Kiyosaki, Rich Dad Poor Dad that we're talking about, you know, millionaire, and yeah, these things might work for him, but they may not be applicable to the average taxpayer. So, but it opened my eyes, and that was the first thing, and that's what matters the most. That's why I'm here, um, giving these lessons. I just want to open your eyes. Okay. Hey, there's another way, and I believe a better way. Okay. So tax planning is not what you do at the end of the year, but it's what you do throughout the year. Okay. How you live your tax life throughout the year to get a certain outcome at the end of the year, or at tax time, so to speak. Okay. It's what you do before the money is earned, before the money is spent, and before the IRS even sees your paperwork. I'm passionate about this. I'm passionate about this for a couple of reasons. Okay, I'm passionate about it because, as I've said, and as I'm going to keep on saying, I believe that tax planning, every taxpayer can have some sort of tax planning in some measure that would benefit them. Okay, and yes, the tax laws are written to benefit uh, certain taxpayers that are positioned, like I stated before. If you're a business owner, you're positioned. If you a higher earning person that may have uh, really good income but have a side gig or a side hustle, or another career skill that you put together on the side, you're positioned. If you own real estate, you're positioned. But if you're the average taxpayer, you are positioned from a standpoint of putting a plan together that will help you have more predictable outcomes in your tax life. Okay. But yeah, tax planning is proactive. It's strategic. It's mission focused. Okay, you guys know I used to be in the army, and it was always about, when I was in the army, about the mission, and I have since then, and will always um, be mission focused. You know, when as I'm training my children, even on small little things like, okay, we gotta clean the house today. What's the mission? We gotta clean the house today. Okay, I kind of phrase things and focus things like that. And in your tax life, in some ways, there are missions that have to be carried out to get a certain outcome. And most of all, tax planning is intentional. Okay, you have to stop, you have to think, and you have to make a decision that I want to live my tax life in a more proactive versus a reactive way. Okay. The main thing that tax planning, the main promise, the main benefit that tax planning brings is that it utilizes codes that are already planted in the IRS. All you need to do is find those codes, or your tax professional find those codes that are applicable to you. And if they aren't applicable to you, then you position yourself so that they will become applicable to you, that you could utilize them. This is what the 1% of the one percenters that that are out there, and if you don't know what that term means, look it up. But it really means those folks that are high earners. They don't really pay taxes because they position themselves not to legally pay taxes. So I mean, don't hate the player, hate the game. Okay, um, but you've heard me talk about things like tax strategies and tax tactics. But let's right now let's talk about tax strategy. Okay, what is strategy, and then how is it implemented in a tax world in your tax life? Okay, a strategy is a deliberate. Okay, deliberate. Okay, you don't just kind of fall into it. It's intentional, it's deliberate, but it's a deliberate set of decisions that are made by a taxpayer on how they are going to live their tax life through the framework of the IRS and even state tax codes to ethically and strategically and focused reduce their tax burden every year for the remainder of their lives so that they can receive the benefits of um, tax planning in the form of tax savings. And then tax savings, i.e., money, is a tool that you can use to affect your other lives. Okay, so again, we want to talk about the main benefit and the main difference. It's thoughtful. It's proactive, not reactive. It's looking at the tax laws and seeing which ones benefit you the most. And again, I know when I'm talking in these sessions that I'm not talking to tax professionals. And hopefully I'm talking at some point in time to thousands and thousands of people that are just the ordinary taxpayer, but they have in their mind made a decision to live their tax life differently. And if you don't want to take, let's say you don't want to take the time to look at the tax laws, then find a professional, okay? And if the professional that you're working with is a professional that only knows tax preparation, then it might be time that either you urge that tax professional to step up his or her game, or you find somebody else if you want to use tax planning in your benefit, okay? Next, the let's talk about how tax planning came about. Okay, tax planning as a discipline. Let's look at tax planning from a historical perspective, right? So the IRS code, in particular, has always talked about allowing deductions and credits. Deductions and credits were basically allowances that were given and are given to taxpayers because there's certain things that we need to use money for to live our lives. And the government, which, when we say the government, we're basically talking about politicians that were put into office by election mostly. They decide, okay, the government, the United States needs revenue. And we put into place in 1913 these laws that now tax um, personal income. Okay. But is it really fair just to tax everything you make from day one to from the start? I mean, shouldn't we give the American taxpayer, the American citizen, a little break in the fact that there are certain things that you're going to need to spend money on to live your life? And that's where deductions and credits come into. They allow you to reduce the amount of income that is going to be taxable because of things that we buy and pay and living expenses that we incur as the result of being a human being living in the United States. But it wasn't really to the 80s and 90s that tax planning really became a formalized field. Okay, and it was primarily, like I said, it was primarily relegated to wealthy individuals. Okay, and you know sometimes when you know better or you know how the game is played, you can play the game better. Okay, and in most of our cases, it's not our fault. We were just taught one way, and we lived our tax life that way that we were taught. and that way was and still is sufficient. Okay, but do you want to live a life of sufficiency, or do you want to live a life of potential abundance? Okay, ask yourself that question. All right, so wealthy individuals and corporations began really doing research on the tax code and paying attention to laws that were voted into about taxes. And as time went on, the tax law became favorable to certain taxpayers like business owners, real estate investors, and investors in general. Okay. And the tax code started to say, hey, look, because these individuals are investing in the United States by way of creating businesses and creating homes for people to live in, and providing ways for people to make money through corporations and stocks. We're going to give these taxpayers, these business owners, these businessmen and women, um, tax breaks. You hear a lot of people call them. I don't really like call them tax breaks, or you might even hear the word loopholes. And but they're really just incentives. And if you really want to take it the next step, the government is kind of letting you know, hey, if you position yourself properly, we're going to give you these benefits or these incentives to save. And then the hope is, okay, and when I say the hope, we go back to the the way the intentional, or the original intention of taxes in general. It was the collective can do more together than the individuals. So collectively, if we get money from the folks that are in the collective, and then we get that money and pool it together, and then we can do things like, I don't know, sewer systems, aqueducts, street lights, things like that. So, I mean, in its original intent, yeah, it's fine. And then taxes were fine. And now we're going to incentivize taxpayers to live a tax life that is proactive. But what happens is it was never marketed to us. And I think in some ways it was kind of kept hush hush, um, because if competitive advantage, let's call it. Okay, let's use competitive advantage. All right, so wealthy individuals started using different strategies like um, depreciation, or cost segregation, or how to structure your entity to benefit you tax wise, or deferral of income strategies, or income shifting, or I mean, there's just a myriad of tax strategies and tactics that you could use to affect your tax life. Okay, and it wasn't until, like I said, the 80s and 90s where if you were in the know in the tax professional world, you were starting to shift some of your your time and your effort and your business, maybe from tax preparation into, which is all about compliance, into tax planning. Okay, because tax planning is more holistic, and it's more of a relational type of situation. um, and the individuals that you were working with were maybe a little bit more economically advantaged, maybe a little bit more knowledgeable than the revenues that a tax planning person might receive, may receive, does receive, is going to be greater than the revenues on an individual tax preparation basis. Okay, so tax preparation, when you think about it, is really, it was really brought out there as something for the masses, whereas tax planning was really introduced as something exclusive. But the reality of it is, with the world changing, the whole exclusivity thing, and that you gotta let that go. You know, um, when you know better, you should do better. And if the eye, if your eyes have been open to how the game is really played, and now you know what the real rules are, and they're bigger and better than you ever thought, but you have to do a few things to be able to play the game in its best way. Then that's what you got to do, and that's what's happened, and that's the difference between one of the differences between tax prep and tax planning. Okay, so today tax planning is multi-billion-dollar industry. Okay, and you have corporations and you have CPA firms that that's all they do is tax planning. Okay, but now tax planning is starting to come to the masses. That's what I'm here to do. Okay, that's my mission. That's my purpose. Um, I believe once my eyes are open, I can't go back and just talk about tax preparation. I can't go back and just perform tax preparation. And I got to be, what's that? Paul Revere. The I got to be out there. Tax planning is coming. Tax planning is coming. Tax planning is coming. If y'all might be too old to realize and recognize that. Plus, I went to junior high at Paul Revere. So anyway, but yeah, I'm here to herald that and put it out there. But yeah, tax planning, multi-billion-dollar industry now, and um, tax planning is where the wealthy live their tax lives, right? And if you're not wealthy, you can actually still live your tax life in the tax planning arena, okay, in some form, okay. And then if you're not there, then you position yourself to be there, okay. So I want to talk about my principle tonight, okay. And I need you guys to know that I'm deaf on principles because they keep order. They give us a guideline to go on. Okay, they set the baseline sometimes of our behaviors, and order is good. Some of you may not may not believe that. Yeah, yeah. I'm here to tell you, chaos is bad, and order is good. Okay. I know some folks that just live in the land of chaos, right? But order is good, and principles, okay, and laws that are immutable, which means they don't change. They operate um, seamlessly, and if you know them and then follow them, especially obviously the ones that are positive, then your life should be better. Okay, so this lesson's immutable law. It's called the law of forward control. Okay, forward control, and I'll go ahead and give you some definition. You can't control what has already happened. Okay, i.e., tax preparation. Okay, but you can absolutely control what happens next or going forward, i.e., tax planning. Okay, the law of forward control reminds us that some of the greatest financial gains in our lives comes from decisions that are thought out and are intentional and are done prior to the time where we can't go back. Okay. Now I'm sure some of us have. Let me give this is an example, maybe. Um, had an opportunity, and there might have been a time limit on that opportunity, and the decision to take advantage of that opportunity was very important. And in some cases, we took the opportunity, we took the time, we met the deadline, so to speak, and we reaped the benefits. But I know in some cases, my life for sure, I can think back on times where I could have followed a law or a principle or taken an opportunity, but either I slept on it, or I was hemming and hawing and wishy-washy. I was making choices versus decisions, and then that opportunity or that deadline passed me by. Okay, um, it the law of forward control says that hey, you gotta position yourself before in order to get the more favorable outcomes. Okay, so tax planning is about positioning. It's not about just paperwork. Okay, and if you're only meeting with your tax professional once a year, okay, then you should know for the most part. When I say meeting, okay, let's you don't want to be literal. Over the phone, on the video, um, in person. But if you're only meeting with them once a year, then you're not doing tax planning, and you're probably um, missing out on opportunities. Okay, missing that quote unquote deadline. And always when we talk about this, I mean, yeah, the bottom line is the opportunities we talk about um, really are about money. And I always want you guys to know money is just a tool that we use to um, enhance our lives. Okay, just in more money, potentially more enhancement. Okay, some people might say more money, more problems, but that ain't my opinion. Okay, I believe more money, more opportunity, and your opportunity could be it's endless. It doesn't have to be a selfish opportunity. It could be um, something that is all about helping others. Okay. So if you meet with your tax professional person, then you're probably missing out. You're probably doing tax preparation. You're probably um, losing money. Okay. So let's talk about tax planning for your life in a couple of scenarios. Okay. If you're a business owner. Okay. Um, I don't like to use the word love unless it's dealing with a person, but I really, 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 really like business, right? And you can look at business as sometimes like a person, or businesses have lives. Businesses are born, right? Oh, we started a business. Oh yeah, okay, oh yeah, um, and then they mature. Oh, okay, we reached $100,000 mark. Okay, oh okay, okay. We're $1 million company. Ooh yeah, okay. And then on the other side, businesses die. Okay, how many of you guys have heard of Kmart, right? Or how many of you guys have heard of Circuit City, right? Or you know where I'm going. Okay. So businesses, this is one thing I learned in business school. Businesses have a life cycle. So I look at a business, or I look at businesses as people, things, not things, or but yeah, entities and relationships, because there are people behind every business, right? But tax planning works some of the best for businesses. Okay, this uh, are you a sole proprietor, or are you an LLC? Are you an LLC, or are you an S corporation? What's your entity structure? Okay, those are a few things from a strategic standpoint that could change your tax life. Okay, how about if you're a high earner, make a lot of money, right? I got clients that are $1 million and knocking on multi-million dollars, and the big question is, I mean, wow, it's first off, I congratulate them on making that money, right? And then it's like, okay, well, what are we gonna do to save that? Because you should see some of these tax bills when a client comes into me that's been a tax preparation client, and now they want to switch over to doing tax planning, and I look at their previous tax return, and I see their tax bill, and I'm going, man, that's a lot of money. I mean, I'm talking a lot of money. And my first order of business is to say, okay, how can we get this number down lower? Um, if they're just a wage earner, we got to reposition them. Okay, we got to get some businesses started. We got to get some real estate as soon as possible. We got to work on charitable contributions. I mean, these are some of the things, right? This is tax planning in effect, right? What if you're a taxpayer that owes every year, right? Or every year, it's like, like Charlie Brown, it's like sad. Well, I mean, you got to do something. You know, there's something that can be done. Somebody got to analyze something, and when the analysis is made, maybe there might be one or two things from a strategic level that you can do to change that dynamic. But if you keep just doing the same thing, prep, and not thinking about the alternative, then keep doing the same thing, you get the same results. But it might be something like just changing your withholding. Okay, meet with somebody every quarter and say, okay, this is my pay stub. This is what I'm withholding. Okay, why do I owe every year? Okay, and maybe somebody can identify, hey, you just need to make a few changes here. Hey, it may mean a little less money throughout the year, but you'll have a smile on your face, or not a frown, at the end of tax time if you make some changes. And then maybe you gotta tighten your belt on some things, right? Um, uh, those are some examples of how tax planning can work in specific scenarios. Okay. What I want you guys that are listening to this lesson, watching this lesson, okay, to get from this lesson is, uh, I'm not dogging out tax preparation. I make a lot of money doing tax preparation. It's compulsory. You gotta do it. Okay. Um, so, but I'm just saying that it's only part of the big picture. Okay. Um, it's compulsory. You got to do it. Um, it's important, but planning is powerful. Okay. Important tax prep, yeah, but powerful tax planning, yeah, and it's intentional. Okay. It's mission focused, like I said. Okay. If you want better results, okay, you got to have a better strategy. All right. You want better results, you got to have a better strategy. All right. So, action items. What do we want to do after this session is over? Okay. And I want to say I had a meeting, an interview with a client. Uh, if Yolanda watching, if you're out there watching, great conversation today. You inspired me in your entrepreneurial journey, and trying something new. I can appreciate it. The lack of fear and going for it. So, and she said she was going to be watching, so I want to definitely give props. But here's some things that we can do. Okay. Um, if you have a tax professional and you are inclined, so to speak, to look into tax planning, okay, in your tax life, then you might want to talk to that person and say, hey, look, what do you know about tax planning? Um, is there some element of it that we might be able to implement in my tax life? Okay. How about you, and just as a person, taxpayer, kind of do an inventory. It's almost the middle of the year, maybe first quarter inventory of your tax life. Okay, how much have I made? If I'm a business owner, are my books in order? Okay. Um, is there anything that I could do to save in the remaining portion of the tax year? Okay. Or maybe just think about some long-term goals you have. Guys, you always ask you at the end of each one of these sessions, what's your dream? Start asking yourself, well, hey, what's my dream? Um, Question: If what what kind of changes would an extra 10 or 20% of income every year make in your life? What could you do? Okay, and it doesn't have to be do for you. Okay, um, it could be, what can I do for others? Okay, you might have somebody that is aging and you want to provide more for them, and you just can't because you can't afford it. I hate to use that word, but if you make a couple of changes in your tax life, bing, maybe now you got an extra 10% income, and now the thing or things that you might want to do for that elderly person, that dependent, you can do. Okay, let's look at it like that, because I really don't want you guys to ever think that this is all about money and getting stuff and buying things. I had a conversation last night with my wife about storage companies. I mean, they're everywhere, everywhere. And all that's telling me is that folks is buying stuff more than we need, and then we run out of space in our own house and got to rent space, okay, for stuff that we're not using. But maybe um, we take some of our excess 10 and 20% and help somebody else, brighten somebody else's day. Um, that's a possibility, okay? That's some of the things that I want to do. But yeah, what could you do? What would you do if you had an extra 10 or 20% income every year? Okay, what would you do to um, live your dream? Okay. Okay. Finally, I just want to leave you with a quote. Well, that's not really a quote. Something I wrote down. Right. Um, so strategy is what separates the wealthy from the overworked. Okay. Strategy is something that separates the wealthy from the overworked. If you want to build wealth, you can't just report, i.e., tax preparation. You can't just report your tax life. You have to design it, i.e., tax planning. And remember, you are the financial architect of your tax life. But you have to design it and live it. Okay. All right. It's that time. I gotta go. I appreciate the opportunity. And as usual, after every one of our sessions, I just want to ask you to ask yourself, or just ask you, what's your dream?